What's up everybody, GenExDividendInvestor here. In this video I'm going to reveal the top 10 dividend stocks for December that investors on my Dividend Discord chat server voted that they're buying or plan to buy. Each month I run this top 10 stocks poll and I have gotten hundreds of votes. The link to my free Discord that has over 5,000 investors on it is in the description of this video. As I review the results of the votes, I'll also be sharing my perspective on if I agree or think something is better. Then I'll end this video with a powerful life story that is worth hearing and reflecting on, so I recommend you watch this entire video. Please consider hitting the thumbs up button, subscribing if you haven't yet, and click that bell notification. Okay, the 10th most popular stock in the poll with 16% of voters is a popular dividend stock which some people categorize as financials and others categorize as tech, and that's Visa, ticker V. Visa has a consensus analyst rating of a buy, a decent 12 consecutive years of dividend increases, an awesome 23% payout ratio, a very low 0.6% yield, an incredible 3-year dividend CAGR of 20%, a very high PE of 49, and a 0.93 beta. V is at about $213 a share, just off their 52-week high of $217 and way above their 52-week low of about $134. If you bought Visa under $100 a share, then leave me a comment down below so I can be jealous of you. Okay, the 9th most popular stock in the poll with 17% of voters is what some call a sin stock, and that's none other than Altria, ticker MO. Altria has a consensus analyst rating of a buy, a decent 12 consecutive years of dividend increases, a 79% payout ratio, which is normally high, but which is reasonable for Altria management, a big 8.32% yield, a strong 3-year dividend CAGR of 10.4%, and a 0.93 beta. Altria is about $41 a share, below their 52-week high of about $52 and above their 52-week low of about $31. If you're interested in hearing my thoughts on investing in sin stocks, then watch my video I recently did called Millionaire Dividend Investing Questions and Answers for November. TLDR, tobacco has headwinds, but at these prices they're hard not to puff on, financially speaking. Okay, the 8th most popular stock in the poll with 19% of voters is a financial powerhouse, JPM. I've banked with JPM for a long time, so I appreciate some of the perks they've given me over the years, such as Chase Private Client. That being said, if you watch my channel, you know I've invested in Goldman Sachs as a financials capital appreciation play. But JPM is one of my favorite long-term financial dividend stocks these days, along with Visa. JPM has a consensus analyst rating of a buy, a decent 10 consecutive years of dividend increases, a strong 47% payout ratio, a slightly low 2.94% yield, a very nice 3-year dividend CAGR of 16%, and a 1.18 beta. JPM is at $122 a share, below the 52-week high of $141 and above their 52-week low of about $77. Gotta love JPM. Okay, before we move on to number 7 in the poll, I thought I'd mention that you're seeing some data that is from my Best Dividend Stock Spreadsheet Portfolio Tracker 2.0. My 2.0 product has a powerful spreadsheet tracker which does all the standard things you normally see in a stock trader, but I've also added a bunch of valuable tools in it, and one of them is called the Stock Comparison Tool, which lets you quickly and visually compare key business metrics between tickers. So if I put in Coke and Pepsi into the tool, you see that it first shows you a description of each one, and below that you see a bunch of useful information that I'm using in this video. It highlights the better metric between the two companies in green, and then it puts the lower comparison metric in yellow, or leaves them unhighlighted in gray if they are the same. So in this case we see that Coke has 58 consecutive years of dividend increases, so it's highlighted in green, versus Pepsi which has 48 consecutive years, so it's in yellow. Then if you scroll down you see a ton of awesome trend information that I use in some of my videos, like dividend payout trends, dividend yield trends, quarterly EPS trends, shares outstanding trends, asset versus liabilities trends, revenue trends, profit trends, price to free cash flow trends, and debt trends. If you're interested in getting your hands on my spreadsheet, then watch my video called Best Dividend Stock Spreadsheet Portfolio Tracker 2.0, which will show you all of its features as well as explain how you can gain access by signing up as a Patreon aristocrat or king. Okay, the 7th most popular stock in the poll with 20% of voters is my favorite tech dividend growth stock, and that's Microsoft. If you're getting the new Xbox, or if you already got it, please drop me a comment down below. Microsoft has a consensus analyst rating of a buy, a nice 17 consecutive years of dividend increases, a great 33% payout ratio, a very low 1.04% yield, a nice 3-year dividend CAGR of 10%, and a 0.93 beta. Microsoft is at $214 a share, below the 52-week high of $232 and way above their 52-week low of about $132. Take that to the bank, Master Chief. Okay, the 6th most popular stock in the poll with 21% of voters is my largest dividend stock by portfolio value, and that's no bull, but it's a fruit, and of course I'm talking about Apple. Apple has a consensus analyst rating of a buy, 9 consecutive years of dividend increases, so almost into respectable double-digit territory, has an amazing 24% payout ratio, a very low 0.67% yield, a nice 3-year dividend CAGR of 11%, and a 1.18 beta. Apple is my best performing dividend stock, which I've held for less than 2 years, and is up around 217%, which is beyond silly and not normal. Of course, taking out my little health incident I talked about in my emotional video called The Time I Sold All My Stocks, then my best performing stock of all time is actually Microsoft, though it's only up 32% in less than a year because I waited a bit like an idiot to get back into it. My first tranche would have been up over 1,000%. These aren't normal market times though. My Tesla is up around 500%, and I gotta thank my wife for that, as she was pressing me to invest in Tesla, and I remember telling her I thought it was too spendy. So clearly I'm an idiot. But I also think that anything in the EV space is way hyped right now, and that little pullback we experienced in March wasn't a real correction like the dot-com one or the 08 one, both of which can hurt for years. I hope you are all mentally and financially prepared when the real reckoning hits the market. Apple is at $122 a share, below the 52-week high of $137 and well above their 52-week low of about $53. Okay, the fifth most popular stock in the poll with 24% of voters is my third largest dividend stock by portfolio value and is probably my favorite, and that's J&J. These metrics help explain part of the reason why I love J&J. They have a consensus analyst rating of a buy, a redonkulous 58 consecutive years of dividend increases, a good 61% payout ratio, a low 2.69% yield, a decent 3-year dividend CAGR of 6%, and a 0.7 beta. I'm guessing I'll go to my grave seeing J&J continue on their amazing streak of consecutive years of dividend increases. J&J is at $150 a share, just below their 52-week high of $157 and well above their 52-week low of $109. J&J is one I almost think of like a better yielding bond. It isn't safe as most bonds, of course, but leave me alone. My utilities and my J&J are my bonds. Okay, the fourth most popular stock in the poll with 25% of voters is AbbVie, which is almost ABBA if the last letter is turned upside down, which is one of my wife's favorite bands. I'll tell you a funny story about when I was dating my wife. So this was in the days when CD burners were hard to come by unless you worked in a company which had them. Well, I did. My to-be wife was living with her parents at the time, and I went to pick her up, and I had planned to borrow her ABBA CD from her bedroom so I could copy it and add it as one of the tracks of a mixed CD I decided to make her as a Christmas present. I included tracks of me talking to her about how the songs meant various things to us. So this was in the 90s when doing a mixed CD was absolutely unheard of, as everyone was still using cassette tapes for that. Google it if you don't know what a cassette tape is. Anyways, her ABBA CD was her favorite, so apparently she immediately knew I took it, and later she told me that she'd called up her friends, freaking out wondering why the guy she was dating and liking would steal a CD from her. But she didn't feel comfortable asking me why I'd taken it. That mixed CD became her favorite Christmas present of all time, and lucky for me she didn't kick me to the curb for thinking I stole it. And to this day she still plays that CD in her car, which annoys the F out of me because literally every day I gotta hear myself from 20 plus years ago saying sappy things over the car loudspeakers as my kids crack up in the car. AbbVie has a consensus analyst rating of a buy, has a crazy 47 consecutive years of dividend increases if you count their time with Abbott, otherwise they have 7. I believe they have around a 50% payout ratio, though the data source I pulled this from says otherwise, have a nice 4.85% yield, have an amazing 3-year dividend CAGR of over 20%, a PE of 23, and a beta of 0.85. If you want to learn more about the pros and cons of AbbVie, I recommend you watch the extensive deep analysis video I did on them, but the TLDR is that much of their revenue comes from a blockbuster drug named Humira, which should be well protected in the US until 2023. AbbVie's lawyers have built up a patent wall of something like 250 applications, over 100 of which were granted to keep their cash cow protected from others. AbbVie is at $107 a share, which is basically at their 52-week high and are well above their 52-week low of $62. Kudos to you, AbbVie, kudos. Okay, the third most popular stock in the poll with 27% of voters is my favorite industrials company out there, and I'm talking about 3M, ticker MMM. 3M has a consensus analyst rating of a hold, are a dividend king at an incredible 62 consecutive years of dividend increases, have a solid 68% payout ratio, a decent 3.41% yield, a good 3-year dividend CAGR of 9%, a PE of 20, and a 0.99 beta. 3M is $172 a share, below the 52-week high of $182 and well above their 52-week low of about $114. Okay, the second most popular stock in the poll with 28% of voters is my favorite REIT in the world, and that's Realty Income, ticker O. O has a consensus analyst rating of a buy, are a dividend aristocrat with their 25 consecutive years of dividend increases, have a great 4.59% yield, a mediocre 3-year dividend CAGR of 4.26%, and a 0.66 beta. Seeking Alpha incorrectly says that Realty Income has 23 consecutive years of dividend increases. Watch my Realty Income video if you want to learn why traditional metrics such as earnings per share and PE ratios are not a reliable way to estimate the value of a REIT. So professional analysts often use a measure called adjusted funds from operations, or AFFO, to estimate a REIT's value as it represents true residual cash flow, and is often a better predictor of a REIT's future ability to pay dividends. We can see for the 9 months ending in September, Realty Income's funds from operations increased substantially, as did their FFO per share and their AFFO and AFFO per share. During the third quarter of 2020, the company distributed around $242 million in common dividends to stockholders, representing 85.7% of its AFFO of $282.5 million. Beyond those metrics, it's also good to look at rent collection, and they collected 93.2% in September, 93.3% in October, and 93.6% in November, so everything has been trending nicely these last few months. As of September 30, 2020, the theater industry represented only 5.7% of their annualized contractual rent revenue, which shows how a diversified portfolio of strong tenants is helping them during this pandemic, with companies like 7-Eleven, Dollar General, FedEx, Walmart, and Home Depot, to name a few. Let's look at their stock movement in the last 12 months. O is currently around $61 a share, well below their 52-week high of 85 and above their 52-week low of 38. O has done surprisingly well during the pandemic, which is a testament to their strength. Keep on paying those lovely monthly dividends, O management. I should remind folks that as I share these top 10 stocks, it's good to realize that I'm not analyzing businesses. I'm just sharing a few quick metrics to give you some data to consider. When analyzing a business, I normally like to look at growth trends over time, with cash flow growth trends being very important, as are revenue growth trends, profit growth trends, debt trends, etc. However, this video isn't about that. And always do your own research to validate data, ideally against the investor relations portions of their website. Okay, now onto the best of the best, the cream of the crop, the pick of the litter, and yet again it's none other than AT&T, ticker T, with 40% of the vote. AT&T's Warner Media recently shook the world when it said that they were debuting their entire 2021 theatrical release slate simultaneously on HBO Max, which unfortunately isn't great news for theater chains. This should help AT&T's HBO Max be a stronger streaming competitor to Netflix and to Disney Plus and such. Now, we're probably only in the first inning of what might become a new macro movie studio trend, so you may want to watch things closely depending on what you invest in. T has a consensus analyst rating of a hold, or an awesome 35 consecutive years of dividend increases, have a payout ratio of 65%, a high 7% yield, a low 3-year dividend CAGR of only 2%, a PE of 19 and a beta of 0.71. The main concern people have about AT&T is their massive debt load, but they have refinanced more than $60 billion of debt at historically low rates. They had around $180 billion in debt in 2018 after the Time Warner deal, and now have reduced that in around 2 years to $149 billion. I'll be really excited if they can go under $100 billion, as I think around those levels the stock will really wake up, which is also around where Verizon's debt profile is today. One area to be aware of is that Elliott Management, the activist investor who got involved a year ago to make some quick money off AT&T, exited their position. I'm not concerned about this because players like that tend to have shorter time frames that they want to see returns, and I think the real value in AT&T will take longer to materialize. An interesting area of risk for AT&T to watch for will be if players like Starlink can radically expand and then materially eat into some of their cellular wireless footprint. T is at about $29 a share, below the 52-week high of 39 and above the 52-week low of 26. T is one I think looks compelling at around these numbers. Okay, that's December's top 10, and like I said in October in my top 5 oil dividend stock video, and again in my previous top 10 dividend stocks for November video, I still feel that oil stocks like Chevron and Exxon are interesting capital appreciation plays. I think we'll go through a bleak winter due to the pandemic, but then we may have a nice recovery as the vaccines take hold. But who knows? Okay, now I'm going to switch gears and tell you a valuable story about life I found online that's worth hearing and reflecting on. In the days when an ice cream sundae cost much less, a 10-year-old boy entered a hotel coffee shop and sat at a table. A waitress put a glass of water in front of him. "How much is an ice cream sundae?" he asked. "50 cents, replied the waitress. The little boy pulled his hand out of his pocket and studied a number of coins in it. "How much is a dish of plain ice cream?" he inquired. Some people were now waiting for a table and the waitress got impatient. 35 cents, she said brusquely. The little boy again carefully counted his coins. "I'll have the plain ice cream," he said. Annoyed, the waitress brought the ice cream, put the bill on the table and walked away. The boy finished the ice cream, paid the cashier, and left. The waitress muttered to herself as she came back to his table to wipe up, bothered that he took so long to order. But she swallowed hard at what she saw. There, placed neatly beside his empty dish, were 15 cents, her tip. The little boy had opted for cheaper plain ice cream rather than the spend your Sunday so that he could leave her a tip. Moral of the story? Don't judge others, be patient, and bottom line, be kind. Okay, I'd like to call out my latest Patreon aristocrats for signing up, which helps directly support my goal to spread financial literacy and freedom via dividend investing. So thank yous go to ADJ and to BHunter14, who just signed up. As an aristocrat, they gain access to my new Dividend Spreadsheet 2.0 product and to multiple private channels on my Discord, including one where I let people watch my videos before I release them to the public, as well as vote on some thumbnails I use in my videos. And thank you, the viewer, for watching my video all the way to the end. Please consider hitting the thumbs up button, subscribing if you haven't yet, and click that bell notification. I highly recommend that you join my free Dividend Discord chat server, which has thousands of dividend investors on it and is growing all the time. The link is in the description below if you'd like to join. Remember to click the heart emoji on screen to get authorized, or you can wait for me to manually authorize you, which I'll usually do within an hour. If you get value in my videos, then consider clicking on my Amazon affiliate link in the description of this video, and then go shopping online. As an Amazon associate, I earn from qualifying purchases, which means I get a small commission after you click on my link, and then you shop for whatever you need, and it doesn't even impact the prices you pay. Last month, someone ordered the cool eSheen drone with a 4K camera using my link, probably as a Christmas present. So if that was you, leave me a comment down below so I can thank you. Finally, I want to give special thanks to my Team Dividend Discord for helping identify these various dividend stocks. Goodbye for now, and I'll talk to you again real soon. I am not a financial advisor, and these videos are for entertainment, inspiration, and educational purposes only. Investing of any kind involves risk. I am only sharing my opinion with no guarantee of gains or losses on investments.